Good day everyone, welcome back to Pete's Investing. I'm going to be starting a new series on how to trade certain commodities and indices, and today's episode is about commodity trading, and this is all with spot gold, US crude and natural gas. What I would first want to show you is, if you've been following the last couple of episodes, I demonstrated how to trade the CC 1500 with a moving average, and I'm going to show you how to apply that using this technique. So what I have here is three charts. The first one is a daily chart, this is a 4-hour chart, and this is a hourly chart. Now what I want you to notice is the CCI 15 down here. I've got a CCI 1500, that's the jagged line, and the moving average 400 on that CCI 15 tracking. And whenever the CCI 1500 is in an upward trend, the moving average 400 of that is a blue line, and when it starts turning down it becomes red. So you can see here we're currently in a downward slope of the CCI 1500 on a moving average 400. This is the 4-hour chart, and that's also in a downward slope. So that's our indicator to trade the hourly chart. You'll see here as well, that's in a downward trend as well. What I've got up here on the hourly chart are the two programs running. The red is in the shorting that position, and the blue is going long. Now what I want you to notice is on this trend here, so if I mark a line where that starts turning red on the CCI 1500 moving average 400 there, I'll put a line there on that 4-hour chart. That also corresponds with that point. If I show you there, that corresponds with that turning red there as well. So that's where you start shorting the position, and that's also applied here. Now what I've done here is I've included the program which shows the long positioning but also the short. You'll notice when it turns long, those long positions are held for a longer time period. You'll see here the profitability of that long starts declining because the share price is declining, and the profitability of the long position declines. But you'll notice the profitability of the short position increases. So in summary, only trade short when the daily and the 4-hourly are aligned and in a downward trend. Take the hourly trend in a short position. So we're going to be focusing on that trade there. You'll notice here it's entered our recent short positions at that point there. It's added to our positions there. Now we don't put stop losses, we don't use stop losses. We add to our positions each time the short is entered, and we exit the trade when the divergence or the moving averages of the share price starts converging and moving in towards each other. That's indicated by this indicator here. So you can see here the moving average 9 and the moving average 30 are moving apart from each other. That's indicated by that red. And when they start turning in towards each other, that's indicated by the blue. So we enter the trade when two criteria: when the moving average 400 of the CCI 1500 is in a downward slope, which it is, and the moving averages cross over, and the moving average 9 in this case is moving away from the moving average 30. It's indicated by that red line. And we close a trade when the moving average 9 gets closer to the moving average 30. That's indicated by that blue line. So that's indicated by that trade there. So we let that run. We can manage that manually. I've got the program running here to track it. So you can see here currently we've got those two positions open, and we'll track that, and I'll keep an eye on that, and I'll give you an update in the next video. That's natural gas. The same goes for, now what I've done here with these three commodities, I've checked them and they're all tracking down for a daily and a 4-hourly chart. They're all tracking down. So you look at the US crude next. You'll notice the daily is in a downward slope, and so is the 4-hourly chart. And again, just looking at it quickly, it's been in a downward slope for some time, going back to March 22. Again, if I put a vertical line at that point there, Now going back to this point here, you can see here the profitability would have been better staying in a short position as opposed to going long. Now we're still profitable going long, but you'll notice here while we're going long, the position is held and we're in a bit of a drawdown. So we're currently, if you're holding that position now, you'd be having 14 contracts open, but your drawdown is being affecting your bank balance. Whereas in the short positioning, you would have been in and out a few times or many times, and your profitability would have been up at that point. So again, looking into the closer stage, you've entered a couple of trades there. We're currently shorting that position there. Lastly, looking at gold. Again, gold's in a daily downslope on the moving average 400 of the 1500 CCI, and likewise on the daily, on the 4-hour chart. And I've drawn a vertical line there to indicate where you would have entered the short positioning, starting to short position there. Now, what I suggest is you can try and get out of the trade or stop the trades whenever the shorts start turning, the moving average 400 of the hourly chart start turning up. If you can exit the trades, exit it. I would not take the long trades. I would, again, the trend is your friend. Stay in the short positions only at this point. But if you ever get caught in that, get caught in there, just be mindful that you may be held in that for some time in that position. So that's it for now. Those three commodities: gold, crude oil, and natural gas, all in short positions at the moment. And I'll keep you updated as to how that perform in the coming days. Thanks guys. If you like the channel and the video series, hit the like button, the notification bell for more updates, and subscribe, and we'll see you in the next video.